Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's April 17th. We got a couple economic news releases today, and they're pretty high impact ones, actually. We got, of course, the weekly jobless claims. Today we had 302,000 people apply for unemployment last week. The forecast was supposed to have an uptick to 315, and 304 is what it came in at. Now, this range lately we've been starting to see is the best we've seen since 2007. We're getting to the range where we saw in 2007. So very good here. At least we're going in the right direction. Obviously, we'd love to see that come down further, but that's the best we've seen in quite some time. So for a while there, we were in between the 323 30 range, and now we've kind of dipped even a little bit further down in the 300 range lately. So we'll have to kind of see if this continues, but so far so good. Good news right there. And of course, as we'll see later on, the markets will like this. Last but not least, we got the manufacturing in the Philadelphia region, which is the Philly Fed here. We had a 9.0 on the index last month in March, and for this month the forecast is supposed to be 10, and it came up to 16.6. So good numbers there. Came in. Remember, the New York region came in really disappointing, and but Philadelphia is coming in much higher than anticipated. So a little mixed in the Northeast region there. So obviously welcome news right there. So let's go over and take a look here at the headline news. And right now the stock market's up. It was kind of a little mixed earlier, primarily because before that data came out, we had some mixed earnings reports that came out here. So made the markets on both sides a little on the mix up and down a little bit. So Nasdaq was down a little bit because a couple of the earnings reports came out, like Google and some of them, came in a little bit disappointing. But then you got the Dow, where you got some of the financials like Citibank, or sorry, Morgan Stanley, and another one came up a little better than expected. So again, a mixed bag of reports out there. So with all that playing out, the stock market currently is up a little bit. So it's still early in the day, so it could go up a little bit further. It could play out a little bit further. There's also, in Europe, they kind of ended up a little bit lower because there's concerns, because it sounds like there's some fighting kind of going on in Ukraine, where a couple people recently died between the resistance of being brought over to Russia. So there's that's going to be something that could be weighing into our side as well. Investors may start thinking about that later in the day. But because of that, so let's go ahead and take a look how bond market is affecting, what interest rates are doing. So as indicated, we're kind of getting this trend kind of heading downwards again. And as I mentioned yesterday, we still never closed this. I would expect us to maybe even hit down this level again before we can make another run upwards. So we could see a gradual decline, which means basically rates will go up as a result. And if you look at these at 104 to 103, what that means, 104.4 here to 10, let's say 104 here, and we get down 104 to 103 basically is 1 point in average. So, and if you go to 104.2 and 104 here, this is going to be about almost a quarter of a point in difference here. So we could see approximately from where we left off last week all the way down to almost a 1 point in difference in pricing. All right, so obviously that's pretty significant. But when I indicated when we had this opening gap, a few weeks back, this could be a concern in the sense that this will at some point have to be closed, and looks like now could be the time when we see that happening in the next, either this week or next week, depending on the volatility of these markets. All right, folks, thanks for watching. So unfortunately today the rates have been declining, so the rates have been went up a little bit as a result. So from yesterday, we're down about 28 basis points, so that would result for worse pricing today. It would be nearly a quarter of a point difference in the fees for that interest rate that would have been for yesterday where we left off. That's kind of a translation of that. All right, folks, have a wonderful day, and I look forward to seeing you guys tomorrow, and thanks for watching.